right, cool. So basically we'll start with the home buying process as a whole, but I think a lot of people have been asking us about COVID and how that's impacting the market and loans and contracts and all that good stuff. So I definitely want to start with preparing for the home buying process, but I want to give you guys time to ask questions and also for us to engage in some conversation on how COVID's impacting the market. I'll let you guys introduce yourselves while I'm pulling up the timeline to purchase, so you guys can go ahead and start.
We're Kim and Cecil.
My name is Yuriy. I'm an attorney. I'm a real estate attorney, and thank you guys for having us. Me and myself and my associate Igor there. So thanks for having us.
Hey guys, Igor here.
Well.
Nice to meet you.
How you doing, guys? Brian Cohen, Freedom Mortgage, with my associate Gabriel here to educate you guys on what's going on in the market today. We're with the home team of Freedom Mortgage. Well, Dallas and your team, thank you for having us on the Zoom today.
Yeah, absolutely. Thank you for making time
having us.
Yeah, it's a beautiful Saturday. So hopefully we can make this nice and productive. And I hope you guys have some outdoor space so that you can get some sun. I know I need a tan like Brian, because it's really tough out here. All right, cool. I'm just looking for the timeline to purchase, but while I look for that, I'll start chatting. As we all know, when people start thinking about buying, the very first thing they start to do is actually go on Zillow and look at houses, right? And so what we always do is we encourage people to prepare themselves and get everything together, get their team together, know what their purchasing power is, what their plans are. Hey, Gabriel, I'm so sorry. I'm going to mute you really quick. There we go. So yeah, you want to know what your purchasing power is, what your goals are in terms of where you want to keep your monthly payment. Because, you know, you could qualify for a $600,000 or $700,000 house. It doesn't mean you want that mortgage payment, right? So really understanding what your goals are in terms of what you're looking to purchase, what price point you're trying to stay at, what neighborhoods you want to be in. All of those things are really important for you to know, and then getting your team in place. And what do I mean by team? You're going to need your real estate agent, you're going to need your lender, you're going to need your attorneys. Those are the top 3 people that help your transaction get from accepted offer to the closing table. And those are really important. I think people wait till they find the house that they like or a house that they're ready to move forward with, and then they're scraping together to try to get all these people together, right? Minus the agent. Usually they meet an agent some way, somehow, and they might just submit an offer with that agent, but a lot of times people aren't even doing buyer consultations, right? So that's the very, very, very first step. And that's what people always ask me. If I'm thinking about buying, what do I do? Get your team together. So you're going to get your lender, you're going to get your agent, and you're going to get your attorney. Now with the agent, I would say that that's like the half a step ahead of before speaking to your lender, but they kind of happen at the same time, right? With you, when you have a consultation with your real estate agent, it really helps us understand what your goals are, what your timeline is, what you're looking to do, so that we can create a strategy to successfully help you accomplish that, right? Because everybody's buying situation and experience is going to be different. So when you have your consultation, and I'm still going to pull up the timeline to purchase, but when you have your consultation, be ready to have those conversations, right? Know what you're looking to accomplish and be open with us about it. So that way we can start to think of strategies and maybe even giving suggestions and tactics on how to successfully do that. Now, aside from your buyer consultation, and we always say this, we highly encourage you to have an agent as a buyer, especially if it's your first time or if it's been a really long time since you've purchased, because the markets change, things change, loans change. I mean, and especially in New York, it is nuts. So having someone to guide you through the process and take care of the little behind the scenes stuff that has to happen it allows you to continue to live your life the way you normally would, right? The next step is knowing your buying power. So I'll let Brian from Freedom step in on this. Brian, let us know what the qualifications are, what you need to qualify people. I'll let you take the lead.
Definitely. Hey guys, again, Brian Cohen, Freedom Mortgage. Oh, Dallas, you hit a couple of great points there that I just wanted to piggyback. Once you have the thought of home ownership, which everybody should have, right? Fostering home ownership, it is the best thing to reach out to a lender, sit down with them, talk with them, Zoom with them, FaceTime with them, understand what goes into the purchasing a home. Down payment requirements, where your monthly payments are comfortable. The misconception that people walk in with is, what's my maximum qualification? Most of the time when you give someone their maximum qualification, they do not want to make that mortgage payment that equates to the maximum qualification. So what we do at the home team is we cater your pre-approval and prep you for where your comfortability is on a monthly basis, because that's most important. If you're comfortable without changing your lifestyle at a $2,200 payment on a monthly basis, then we have to make sure that we're getting you into a property that's going to keep that payment there. Last thing we want you to do is go out there, find a property, fall in love with a property, marry a property in your mind, and then you hear a payment $1,000 higher than you thought it was going to be. So we have to do all that prep work earlier before you get out there and see it and fall in love. In regards to qualifications in today's market versus before the pandemic, you were looking at FHA government loans. You were able to go down to a 501 FICO score. In today's market, you need a minimal of a 640 FICO score, okay? The good thing, though, on the governmental side, especially with Freedom Mortgage, us being the #1 FHA lender in the country, our interest rates for 30-year fixed are under 3%. Okay.
I want to jump in here, guys, because we're actually in the process of purchasing ourselves. We had gotten a pre-approval a while ago, different lender, 3.675% rate. Brian got us to 2.75. It saved us almost $200 a month in the mortgage payment.
It's huge buying power. It gives you the availability to purchase more at the same payment that a lot of other lenders are out there. Okay. On the conventional side, when you're putting down sometimes 5% down on a condo or a one-family home, you could go as little as 5% down with a 620 FICO score. But on the conventional sector right now, industry that we're in, it's all credit score driven to get you the best interest rate. So that's another thing why it's never too early to sit down with myself and my team, understand where your credit is, understand where we could get your credit to go in order for you to take advantage of the best interest rate possible. So for example, somebody with a 680 FICO score versus 720 FICO score, there's going to be a 0.5 point difference in interest rate. So on a $500,000 purchase, that's going to cost you well over $200 difference, because we didn't sit down early enough in the game plan of this and truly game plan and put a strategy together in order for you to obtain the best financing humanly possible.
Mm-hmm. And I just want to pause real quick. I have the timeline to purchase. Can you guys all see that okay?
Yes.
Okay,
Yes.
great.
Yes,
Everybody who would like, I'm more than happy to shoot you an email with this information along with our buyer packet, and it gives a lot more information than we'll cover.
Yeah, we'd love to have that.
That's great.
Yes.
Just make sure to include your email in the chat box, and then Amar and I will gather that and shoot the email. Brian just hopped on a quick call. So we're right here in the timeline to purchase. We're right at the beginning part. When you guys are really ready, I'm more than happy to set up a one-on-one consultation. We could do a virtual tour or a phone call to really break this down. We usually do these at our Homebuyer seminar, and it takes us like almost 2 hours. So we won't really dig into it that much today. But we're right over here where we're talking about like pre-approval, and next would be the selecting an attorney. Brian, so just to kind of put it back out there to people on some of the things that you mentioned, we're talking at minimum a 640 FICO score right now.
On governmental loans. So that means your VA loans or your FHA loans. On the conventional side, you still can go down to a 620 FICO score, but you're not going to be able to take advantage of the historic low interest rates due to the fact that there's a hit to the interest rate for the lower FICO score.
Now, what would you say on a conventional loan is kind of, and I know these rates change on a daily and weekly basis, around right now, where are we for conventional loan?
On your 700 FICO score, 20% down conventional loan on a one family, $510,000 or less of a loan amount, you're in the low threes. The last 30 days, I like to go off the 30-day window of interest rates. Interest rates have been between 3.25 and 3.5 floating. So it's our job when you hire us, okay, when we're doing business, to watch the market aggressively and make sure that we lock in at that lowest point. But interest rates are like seesaws right now, so we have to catch them on that bottom level, okay? And to piggyback the consultation, Dallas, that you just said, we do all this as a free consultation for you guys in the beginning of the process. We will now, because of the situation we're in, I was old school. I used to meet all my clients in person. Dallas will tell you, so will the guys from Yuriy's office. But now I'm doing a lot of Zoom, a lot of FaceTime. I like to really get to know my clients. Let's become friends. We're in business together. And remember, I'm going to be your psychiatrist and your therapist, not only your mortgage lender.
And Brian, as far as paperwork, right? And I, again, even if you're looking to do a purchase, a sale to purchase, a year, 2 years down the line, I can't emphasize enough how important it is to start the conversation now, because you'll learn if you need to get your credit score up. You might be literally, I was 1 point away from a hell of a difference in the interest rate. 1 point. So you never know where you are, where you can improve your situation, and also just knowing how much you need for the down payments, how much you need for closing costs. Brian, as far as paperwork, what kind of things do you guys ask for?
Definitely. If you're a W-2 employee, the bank is going to require the last 2 years W-2s, 1 month of most recent pay stubs, 2 months of most recent filed tax returns. And if you're getting your down payment from a 401k or a pension or something of that sort, then we'll require the most recent quarterly statement. If you're receiving it from a gift from a family member, because you are able to do so, we will require a 30-day bank statement from the donor, as well as a gift affidavit signed. Or if the money's been sitting in your checking or savings account, we will require a 60-day statement. So very easy stuff. Most of the tax return stuff and W-2 stuff is with your accountant. So usually most clients will email me with their accountant giving me permission to request this documentation, and they'll forward it right over to me since they usually have it PDF on their desktop. We try to keep the process as easy and seamless and harmless for you guys as possible.
Cool.
Now remember, free consultations.
Yeah, I would highly recommend it. If you guys have any questions for Brian, please put it in the chat box, and then Amar can read them out loud. Brian, how would you say, I mean, it sounds like as far as requirements go, it's changed a little bit because of COVID. What other things would you say have
It's really changed more on the investor side. The bank, it feels more comfortable if someone's buying an investment property when they have multiple months reserves in the bank. And what reserves mean, guys, let's just say your mortgage payment is $3,000 a month, okay? The bank would require to see 12 months of those reserves in the bank after your funds for closing and down payment. They want to make sure that you have the liquidity in your bank account. God forbid a tenant wouldn't be paying you. So anyone who's buying primary residence, on a primary residence purchase, you're really not seeing a reserve requirement at that level unless you're buying a 3 or 4 family FHA loan. Then you're going to need anywhere between 3 and 6 months. These funds do not have to be liquid. They could be in a 401k or a pension.
Okay. How much reserves do you need if it's a primary home purchase, would you say?
Primary, it depends where the FICO score is and how strong the file is. So unfortunately, it's not a blanket answer for every loan. Every loan is different depending on FICO score, your debt to income ratio, how much debt you're carrying with the new mortgage payment versus how much money you have coming in, and obviously your down payment, so.
Closing cost wise, what would you say? I mean, I know it's different for co-ops, condos, and single and
Mhm.
can you give a
Def-
just
Great question. On your co-ops, you're looking at about 1.5% of your purchase price. On your condos in New York, okay, you're going to be looking at anywhere between 4 and 5%. One families, same thing. Two families, three families, and four families, same thing. If you're buying out of state, let's talk about Jersey and PA, you're looking about 2.5%, depending on what the taxes are, because your money in closing costs is you beginning your escrow account. And that's something we could get more in detail on a one-on-one when you guys reach out. But just to throw it out there, some taxes could be $3,000 a year and some can be $17,000 a year. So it all equates in percentages, and it's hard to come up with an exact number.
gotcha.
But we will. That's the reason why you want to talk to a mortgage professional in the beginning. The three main things: you have to understand how much your out-of-pocket costs are going to be. That's your down payment and your closing costs. Okay, how much money do you have on a monthly basis, and then what your buying power is to cater your needs for the monthly payment you're looking for. You know, so those three things are the most important.
Cool. Agreed. And I would say too, having all of these things together really allow you, because we're over here, when you look at the timeline of purchase, we're in that pre-approval phase. Once you find the property that you want to put an offer on, everything goes really fast, right? It leaves you limited time to know, even find these people to put into place. So having everyone together is important. Having that pre-approval there ready to go when you're submitting an offer is a necessity. We don't know any sellers that would accept an offer without knowing that a buyer is qualified to purchase that property for that price, right? Brian, I'll make sure to leave Brian's information when we send you all an email with our purchasing packet. Brian, thank you so much. If you guys have questions for Brian, just leave it in the chat. We'll leave it towards the end for that. In the timeline of purchase, we're now here at the selecting an attorney part. So I'll let Igor and Yuriy pop in on this one.
And in my opinion, you have the best attorneys in New York on this phone call, guys. So
thank you for the kind
words. Take it away.
Thank you guys. Thank you guys for having us. And listen to just hearing Brian talk and Dallas talk about the interest rate it's an amazing time to be looking to purchase a house. I have clients that I've seen refinances going back, let's say 15 years. People were paying 6, 7, 8% interest rate. So you think about a 2.75 interest rate. That's, in my opinion, is free money at this point. Quote unquote free money. So it's a good time to be a purchaser for a house, because you could take advantage of these are just unheard of interest rates. Before maybe this market, the lowest I've seen is somewhere in the low threes, and just hearing a 2.75 on a loan, it's amazing. Those are amazing savings.
Huge difference.
As far as what we do, we are, once you have your offer accepted, once you have your financing in place, the next step comes in is where you find an attorney and we negotiate the contract. Okay, the contract is very simple, potentially, right? Has your name, has the seller's name, has the property you're looking to purchase, and should have the amount of money or the purchase price, right? But there's another 20 pages attached to that first page that states all of that information. So what are those 20 pages there? Those 20 pages are representations and contingencies made by the seller and the buyer. Here, I think the most important thing with what I get asked for are the contingencies. The contingencies such as the mortgage contingency. What happens if I get denied for a loan? What happens to my down payment? Down payments, are a substantial amount of money that a buyer puts down on contract, in order to secure that contract and secure the purchaser, and in other words, puts money in the game or skin in the game to secure that property. So what happens to that money if in the event something happens and they can't get the loan? So that's a contingency. That's something called a mortgage contingency. So there's language in the contract that protects that down payment, those down payment funds in the event that you aren't able to get financing. So there's other contingencies that there's plenty of and representations in the contract that protect both sellers and buyers. Inspection contingencies. Dallas could walk you through some of the stuff. Inspection, representation, they bound the property, all of that stuff. But I think we wanted to speak about the COVID impact on COVID contingencies. Is that right, Dallas?
Yeah. Throw some of those in there.
So there's a new contingency that came along with COVID, and it's actually a separate addition to the contract. And what it states is basically, as we know, everything got impacted by COVID, not just people's jobs, also county clerks' offices, which record the mortgages and which actually are able to pull mortgages and deeds for the property. So that affects title reports. Also, financial institution were affected initially, although I have seen Freedom and Brian's team move files very quickly as of recently. But prior to, let's say, maybe the month in maybe some mid-March, there were issues with financial institutions that weren't able to, were moving slower because there weren't people in the office. And that happened again. It's since really sped up the process because people got used to it. But initially, that it took a toll on that as well. So there's a new rider now that says that in the event that anything's delayed, such as your title reports, your lenders, or you're furloughed, or God forbid somebody in your family or yourself is impacted by COVID, now that you could extend the closing dates and all the dates for an agreed about period of time, anywhere between 30 to 60 days is what I've been seeing. And in the event that you're furloughed, or you lose your job, or the health deteriorates, there's an out, meaning that you could potentially terminate that contract and get your down payment back, that substantial amount of money that you put down to secure that loan. And again, this is all unprecedented. It just came upon maybe somewhere in the middle of March, this new rider, but now both sellers and buyers are agreeing to put that into the contract in order to protect sides. So there's protection now if you're making these offers. Don't think about that God forbid something happens to me. I made this offer on this house and when I'm putting down all this money, the contracts call for that, and then I negotiate. My team does as well, that this with tooth and nail, and it's a big thing that we insist that's put into every contract just because of the unknowns.
Yeah, and I will, just to piggyback off of that, so you guys know, these are all things that happen. I mean, before Yuriy gets something called a deal sheet, these are all negotiations that your agent should know exist, so that when you're submitting an offer, these things are included in the offer, right? Some of the more common things, and Yuriy mentioned these things go in the contract, are a mortgage contingency, so that you need to approve and be able to close on a loan to be forced to buy this house, or you won't lose your down payment. God forbid something were to happen to stop that, right? So the mortgage contingency is the most standard. It's the most important one. Inspections, making sure that you are able to get the house inspected before you go into contract to make sure you don't have any leaky roofs or health hazards. Appliances, working order, and fixtures, right? Sometimes you see a house with a beautiful ceiling fan, and then you go for the walkthrough and you see that they took that nice fan. So those are little details and things, but it's important to include because that's an expense that ends up coming up, right? And those are things that we will let Yuriy and Igor know to include in the contract when they send that contract out to the seller's side. Or usually the way it goes is the deal sheet happens, the both attorneys get it, the seller's attorney sends the proposed contract to the buyer's attorney, and then they go back and forth and they negotiate the terms and the language in the contract.
Great point, Dallas. If I could just jump in real quick. Hi, guys. Igor with the law office of Yuriy Moshes here. Yuriy touched on a lot of good points, and so did Dallas. But in the end of the day, our job is to walk you through the process of purchasing this legal contract. We make it very simple to explain everything from A to Z. You want to buy, they want to sell. The most important part is to be able to exit the contract, to return your down payment money back. We put additional clauses in the contract to protect your money, to protect your interest. That's the bottom line of the most important part of the contracts. We have funding clauses in there that if the loan doesn't fund, if the bank goes out of business or whatever situation that prevents the funding, we can still get your money back. Mm-hmm. So it's very important to understand that no matter what the situation is, we're always looking for your behalf to make sure that you're able to save your money in case of an emergency, in case of an issue, in case of something happens.
Now, just to play devil's advocate, because I know we have more buyers viewing this than we do sellers. But on the seller side, what are some protections and what's some language that you're seeing in the contracts to protect sellers who, might be going into contract with these buyers and then risk having a buyer back out?
That's a great question. So what we usually tell the sellers is, or the listing agents, to make sure that their pre-approval is up to date. Because if they got pre-approval, let's say for Brian and his team 2 months ago, 3 months ago, that program may have changed. Let's say FHA with a 640, or they had a 580 credit score, whatever the situation was. So make sure that the pre-approval and the buyer, it has ability to purchase. Some of the language we put in is to say that, the buyer has enough funds, that they have enough money, they have good credit in order to purchase the property. Aside from that, just the contract, the COVID-19 obviously protects both sides, the addendum, okay? And, it's all contingent. I mean, once we get the mortgage commitment, they're supposed to go for the closing, but anything can happen in a transaction. Title issues of some sort, liens, violations. We try to have an interview with our clients. We try to walk them through every step of the process. It's very important to communicate, to follow up, and to have a responsive team such as ours, where we have numbers. So it's not just Yuriy, it's not just Igor. We have a dozen paralegals, we have a couple attorneys on staff, and we always make ourselves available. If any questions from sellers or buyers, even on the weekend, I make ourselves available, as you can tell now, to make sure that every step of the way that you understand the process.
You guys actually, you work the weekends like us too?
Who said that, Brian?
It's a 7-day-a-week job,
I mean,
guys.
it's something now more than ever. I feel like with the COVID-19, it's much more, you need to be more organized, I would say. Each closing is taken a lot longer. There's a lot of time lapse due to the fact that either just how the social distancing and how the closing needs to happen is through Zoom calls or, notarizing with one party, pre-notarizing with another party, and nobody really sits in one room together in a close proximity anymore. Yeah. So this is the new normalcy. This is Zoom right here. This is the new normalcy. And it's something that we do electronic signatures with clients to make sure that we don't waste any time, that if you have a good offer and it's on the table, we don't want you to lose the contract. We go back and forth, we follow up a lot. And of course, we keep everybody in the loop as to the process, the mortgage, the real estate agent, so that everybody's working together to come up with a common goal to get you that house, get you that roof over your head, or sell you the property.
And guys, how are you managing closings now? I just want to emphasize too, sure, for everyone, that not everyone is making closings happen with all of this. I mean, we have plenty of attorneys who are deciding to wait for this to pass before closing. So even choosing your team now, it's really important to make sure you've got attorneys who are actually doing what they need to do to get you to the closing table, as well as lenders with the mortgages. But how are you guys handling closings right now?
Yuriy, you want to jump in?
Can I give a quick story of a refinance we closed yesterday?
Yeah.
The couple, the wife was pregnant, so they literally did the closing in the backyard.
Oh.
Backyard of the house, refinance. I have pictures.
It's funny you said that. So we actually had also curbside closings in the parking lot.
Yeah.
Yeah,
the title
we've been
company.
doing quite a bit of curbside.
Oh, whatever works.
What?
Right,
Listen, at the
exactly.
end of the day, you need to close, they need to close, the rate expiring. We had scenarios where the rate expiring, we have to close the next day or a few days thereafter.
Programs expire. Yeah.
If we don't close now, the rate expires, the program expires, whatever the situation is, we accommodate, right? And I feel like those attorneys that are closing right now, at least the colleagues in the industry that we have and we work well with, and we know a lot of people in the industry, we do, we coordinate accordingly, and everybody's kind of on the same page to close.
Mm-hmm.
It's business as usual. It's unusual business the way it's done, but it's business as usual.
Unusual business. Yeah.
Exactly. You got to get
I'll say
uncomfortable
this,
to
in
be
my
comfortable,
opinion,
right?
you're never going to get, I mean, you're never going to see those, room full of people type of closings anymore.
I couldn't agree more.
I think this is the new normal. This is just the way it's going to go. The seller will sign with their attorney in one place. The buyer will sign with the bank and their attorney in another place. And then you get the documents in together.
And the funny thing is, that's like every other state but New York.
Exactly.
Well, yeah, New York has always been like very different, and also probably why it takes so much longer to make closings happen as well.
I want to just touch base on one more aspect of closings. And, obviously the goal is to get to the closing table. Sometimes it is out of our hands.
Mm-hmm.
And what I mean by that is when you're purchasing what's called a co-op, where you're a shareholder of a corporation, you're relying on a management company to kind of dictate, and the board to dictate how and when the closing would happen. And sometimes the board are elderly and they will not do an interview with you before you get approved by the board. They have to do an interview. A lot of times it's a Zoom interview, but you can imagine the elderly sometimes don't have the ability to do Zoom, or they don't want to, they don't want to deal with it. They're definitely not going to meet with you. So the interviews, the process is taking a while.
Mm-hmm.
And when we get to the closing table, there is also the additional, that my seller is out of state, I need to get this stuff out. That should be all negotiated prior to. But the management company and the management attorney's office, it's a lot more coordination when it comes to co-ops, and it's taking a lot longer to schedule the closings.
Mm-hmm.
And something that I wanted you to remind everybody, because of the COVID-19, when you deal with Brian, he said the last 30 days, he mentioned about the rates. It's a great rate, to jump on and to lock it right away. I would hold off on locking any rates until you get closer to the closing process, because you don't want that rate to expire.
I couldn't
and
agree
have
more.
Additional fees.
Thank you for catching that, Igor.
Yeah, I mean, we had people rate expiring tomorrow and the seller's not ready, or there's title issues, or COVID-19, or the seller has COVID, or whatever the situation is. And that's been prior to the pandemic as well.
And to piggyback that a little more, Igor, is that, guys, you have an option when you're choosing to lock in your interest rate, to lock it in for 15 days, 30 days, 45 days, 60 days, 90 days, 120 days.
Mm-hmm.
As you get higher in days, the bank has to protect themselves with the pricing that they give you, because they do not know where the market's going to be. Mm-hmm. So when you're locking on a shorter term, you'll always get the best pricing. I hope that makes sense. Mm-hmm. And we have to, especially in this market today, really understand we might be willing to close, but the seller doesn't want to close for 90 days. So we have to play the lock perfectly. And that really piggybacks into a co-op. On a co-op, guys, we cannot lock too premature, because during a co-op process, all of us on the phone right here, as their buyers, attorneys, and your realtor and myself, we control nothing except for your financings.
Yeah.
Co-op boards and their attorneys control timelines and everything like that. So on a co-op, we have to play it perfectly when it comes to locking in the interest rate.
And even playing it perfectly with the COVID-19, since we mentioned the COVID-19. There's no perfect, right? I mean, because even if you get a board approval through Zoom, and we had it, now it's a coordination of get the collateral from the sellers. Did the seller's attorney order the collateral in time, which is the stock?
That's the biggest hiccup that I'm seeing right now. Is the
and that's taking longer, because you have about 7 to 10 attorneys to coordinate with management company, and it becomes more difficult. But again, you just have to have the right team, have everything in advance. And
you touched it earlier, Igor, communication with your team. Correct. As long as your team's all communicating.
You know your kind of purchase ahead of time, that definitely allows us all to a little better. That's, and just guys, for everyone on the Zoom looking at the timeline of purchase, towards the end, right where it's a little peachy, that's where you see the differences between just purchasing a single or multi-family home versus co-ops and condos. You kind of go through this whole board package, board approval part, and that's the main difference when you're purchasing a co-op. And well, it's mostly a co-op. Some condos require
Condos also.
but it's not going to be a formal interview or anything like that, right? So this is kind of an extra bump that can usually push us 15 to 30 days past what you normally would close on just purchasing a home. That's the biggest difference between those purchases. And obviously when you buy a co-op, you don't own the physical property, the walls or anything like that. You're owning shares within a cooperation. So that's the biggest difference, and that's the most I'll touch on that. But just to point that out in the timeline to purchase. Thank you so much, Igor. And just to kind of go back to this part right here in the beginning where you're selecting an attorney, let's say you find the property that you love, we submit an offer and the offer is accepted. Congratulations, right? That's the beginning. And that's where, you know, the more important things start to kick in. Then you do an inspection. I'm not going to dig into inspections very much because we don't have our inspector that we often use on the call. But an inspection will run you anywhere between $450 and $850, depending on the size of the property, the kind of property that it is. So that's an expense. That's one of the expenses that you have to come up with on the spot. Most of your closing costs will not be expected of you until you're at the closing table. Aside from your escrow deposit. So when you sign a contract, you have to leave money down, right? It's kind of like a good faith deposit, and that's negotiated depending on how much of a down payment you're putting. Usually it's 10%, but if you're putting 3.5%, 5% down, it's usually half of that. Brian?
One big thing, Dallas, in regards to that, if anyone's a veteran and wanting to take advantage of veteran loans, be prepared on contract to leave your closing costs as good faith on contract. Even though you're doing 100% financing, most sellers and sellers' attorney would like to see some sort of skin in the game.
Yeah.
So be prepared to leave that down payment,
Good point, Brian.
the closing costs there, and that should ease everybody's mind.
That's a great point. Yeah, I mean, the sellers want to feel comfortable that you have something to lose, were you to decide, you know, I just don't want to do this, not for any financial reasons, but you just get cold feet. So that's one of the expenses. Another expense that you'll have to expect is your appraisal, right? Brian, do you know if there's like a range of what appraisal costs are?
$450 one family, $550 two family, $650 for a three, and depending where the purchase price is on the four, I'm not going to give the information until we know it because I don't want you guys to hold me to it.
Got you. And that happens. I'm fast forwarding a little bit, but I'm just giving you guys the expenses that to expect during the process and at closing. That doesn't happen until after you are officially in contract. And what I mean is your offer was accepted, you did an inspection, the seller signed the contract, the buyer signed the contract, now you're fully executed. And that's really when the bank starts on your file. That's when the appraisal happens. That's when they run your title, which that's another expense that has to happen. Igor, do you know what the cost of the title is?
So the title can range, you know, between the title insurance, there's a mortgage tax, which is a percentage of your mortgage amount. If it's under 500,000, it's 1.425%. If it's over 500,000 up to $1 million, it's almost 825%. So figure the title is probably your biggest closing cost. So Brian mentioned, I think numbers like 4% closing cost, the title is probably like 3 or close to 3% altogether. Mm-hmm. You know, because they also property taxes, they hold 3 months in advance or 6 months in advance at some points. Now
closing, but is there a cost to run the title for a buyer?
So there's usually, you know, we have a title company that we work well with, and they will usually waive if the file doesn't close, they'll waive the fee of the title. You know, they'll do favors for us here and there. So we don't really charge if it doesn't go through, but, you know, if it does go through, they have your title insurance, you have your searches, and the titles are taking longer. So we try to order title from the beginning right away when we get the contract fully executed. I mean, fully executed, again, is signed by the sellers and the buyers, and your down payment check is cashed with the seller's attorney. Now, real quick on closing costs, I don't want to want to kind of shoot it back to Brian, but let him explain it. But on the closing cost, we've seen a lot of people put what's called a seller's concession, which means that if the value is there in the property and you're getting the property a little bit undervalued, I don't want to scare people, say, oh, you got a down payment of 3.5%, 5%, and you got another closing cost of 4%, so I need 10% to close.
Very simple. Yeah, very simple explanation, guys. You have a couple of options. On an FHA loan, you have to be minimally vested of 3.5% of your down payment, okay? Your closing costs come from a gift from a family member, a retirement statement, your own funds, or something yourself and Odalis and her team could work out in what's called a seller's concession. So, for example, I'm going to use an easy number of 3%. Okay, if you're buying a property at $500,000 and you need $17,500 in closing costs, your offer to the seller would be $517, which includes your closing costs. So that means your only out-of-pocket expenses are going to be your inspection, your appraisal, your homeowner's insurance, because you always have to pay 1 year up front, and your 3.5% down payment, and of course your attorney fee.
Yeah. And so just
real quick, the attorney fee could actually go part of the
closing. We could add that
cost
into the concession depending on how much maneuverability we have, as well as the homeowner's insurance as well.
Some special things to know with the seller's concession. It's an amazing opportunity. Depending on the market and how hot the market is, it might put you at a disadvantage in terms of looking competitive to other people. For some reason, that's
true.
But if it's a fair game, it's been sitting on the market for a while, or it's a market that's not a heavy seller's market, it's a great opportunity to keep cash in your bank and mortgage your closing costs. And
Dallas, that's really where you step in as the professional to advise, right? That's exactly. Hey, property, my best advice is we should come up with the closing cost versus putting a weaker looking offer with the concession. That's why you have the expertise of her, by your side to execute properly.
Yeah, and I think the biggest reason it's some sellers discount it or worry about it is because even though, let's say it's a $500,000 offer, but you're mortgaging $517,500 because it's including your closing costs, your seller gets that $500,000, but the house has to appraise for the $517,000. So if it's, a property that's already asking top end of what the market is selling for, now they have to worry about it appraising for that additional price. That's usually when it gets a little tricky. But obviously that is something that
very good point, Dallas.
Account for and all that stuff to make sure.
Very good
guys,
point.
Nothing's cut and dry. Everything you have to do, research and prepare and put yourself in the best position to make the right offer. That's all it comes down to.
Absolutely.
Luckily, you got a great team behind you guys.
Yeah. So, so basically we've kind of gone through the beginning, the most important parts. After you're in contract, really your team is the one that moves things along. After you're in contract, the lending side that's when they kick in to make sure that your loan gets approved and everything happens that needs to happen. Then you kind of go into closing, unless of course we're in a co-op. Our job as the realtors at that point, right? Because we're there in the beginning to get you started, and then everybody takes over after that. But we're kind of the directors of the show at that point. We're making sure that everybody's moving and doing what they need to do to move your file to the closing table. And we're also communicating with you to make sure that you understand what's happening, if there's anything that's needed on your end. And then, obviously, if you have any questions, we're usually the ones that are the easiest and fastest to get to. Although I'll be honest, Brian, Igor, Yuriy, they always make themselves available. So I think we'll leave space for questions. Amar, do you see any questions in the chat box? No? All right.
I have a question.
Yeah.
I guess it would be for Brian. How do you determine if you're getting the best interest rates from your own personal bank, or do you shop around?
The market's going to determine that of when you're purchasing, and us prepping from day one to put you in the best position to take advantage of the market of the time that you're looking to purchase. So my job is to make you look like a beautiful, shiny diamond for the bank once it's time for us to lock in that rate. So that's why when I was talking earlier, it's so important to speak to me in the beginning of the process to really understand what that credit score is for us to work on it and get you to the best situation possible to get that best rate.
And then as far as shopping around goes, you guys can shop around. I mean, you know, I
Of
will
course.
say I've worked with Brian in a lot of deals, like for our buyers
Mm-hmm.
and even for myself personally. You get one rate from a bank, they'll tell you what their rate is. And then you know, I always say bring it to Brian because most of the time he can match it or beat it, you know.
I'm never scared of a little competition.
That's nice.
Yeah,
to
I mean,
know.
a lot of people go to the, and you know, I think something to keep in mind too, especially with where we're at right now. Your banks like Bank of America, Chase, those bigger banks, a lot of people have relationships with them, so their instinct is to go there. But these are also the banks that are
That's a
tightening their restrictions.
great point, Dallas. You know, Chase just announced that you need a minimum of a 700 FICO and 20% down.
Yeah,
So
that's
they're
changing.
not lending to everybody.
Yeah.
And also, I think I heard Wells Fargo doesn't do any cash outs, right? And the people
No
who have
cash
the
out.
properties out there,
Wells Fargo's minimal, you know, FHA FICO score 680. So
right.
you know, each
So-
bank is going to be different. You go in, it's all a gut feeling. Whoever you trust in, that's who you're going to work with,
I was just
and
about
hope
to say
that they're
that.
going to fight for you to get you the best deal possible.
Yeah.
And guys, I think the most important thing is relationship and connections. Like once you connect with somebody, nobody should give you a rate of 5% and somebody else 2% for the same product. There's programs, RESPROs out there that may protect the borrowers from, you know, programs of the rate and everything else of that sort. So, you know, Brian and his team, we've seen numbers astonishing, like he said earlier. But, you know, aside from that, it's who you feel more comfortable with, who's going to be there on a Saturday answering your phone calls, who's going to be a therapist, like you mentioned before, who's going to be your psychologist. And the bigger banks are 9 to 5. They don't care about you. You're just a number. So here, it's about a relationship. Same thing with our firm. We create relationships, and we want more referrals because we want to help more people get into those homes. If you have property, you could actually refinance your property and take advantage of the current rates as well.
Cecil, did that
Definitely.
answer your question, or did
Yes,
you
it
have
did.
another part? Okay.
Thank you.
Yeah, and then I think I'll end it with what a lot of people are asking, and I think we spoke about this last month too. I would say a lot of people, especially the millennial crew who's finally getting into buying and having that opportunity, a lot of people are hoping for another 2008, right? So I have a lot of people ask me questions about short sales. Will there be more short sales? Will there be more foreclosures? You know, is it going to become a heavy buyer's market? Do you guys have any input or thoughts? I mean, obviously, if we all had a crystal ball, like Brian likes to say, we probably wouldn't be here. But where do you guys see the market going, even in just the next 6 months to a year?
With interest rates as low as they are right now, it doesn't matter where the market's going to go. If it's the right time for you to purchase and you want to purchase, jump in and purchase.
Mm-hmm.
Over the next 30 years, you'll get all your money back and then some.
Brian, do you see the rates? I mean, I know it's hard to tell because the rates have been the most volatile they've ever been. But do you see the rates going higher or up after this happens? Has there been any input on that?
Personal opinion and not fact, I think we're going to ride this year out with very low interest rates.
Okay, it's good to know.
So you guys got to look at it. Is the risk worth the reward? Think about it this way, right? A short sale that you might get in 2 years for 10% off on a 500,000, you know, say 50 grand, let's call it. But your interest rate's 4.75 versus 2.75. Was that savings of 50,000 really worth it?
Yeah.
Definitely not.
That's
Now's
what
the time. Now's the time to buy, no doubt.
It's like people, I would say, even if prices dropped, which in 2008, I think Yuriy spit this fact. What percentage do you say the houses had went down in 2008?
Yeah, I think when I looked at it in Kings County, they went down, I think, 3%,
Mm-hmm.
right? And then since 2008, you've seen an increase, I don't know, 100 to 300%, depending where.
Yeah, so people are saying even if the house prices drop, let's say 5 to 10%, if your interest rate goes up a full percent over 30 years, there's no savings there. There's zero savings in that situation.
And anybody to not to do a short sale, but at the same time, like Brian said, short sales do take quite some time. And it's right now, especially the banks are not cooperating as they used to cooperate. And, when there was a lot more programs for the banks to do. So it's something that could be time consuming and essentially not pan out the way you want it to be. For
And
the
it
first time
costs
home buyers, I strongly discourage buying a short sale, and a lot of times because, the process itself can get to you and you get discouraged from buying a house. And by buying a house, like Brian said, look, today interest rates are so low, a year from now, half a year from now, we don't know what the rates are going to be. Nobody could predict it. At the same time, if you have a good deal now, now is the time to buy it if you agree with Dallas or not. But end of the day, it's buying a real estate, hold it for 5, hold it for 10 years, you're going to make your money back. No doubt about it.
And another, just more input on short sales. Igor talked about how little cooperation you're getting from the banks. We actually worked a short sale together for 2 years, $1 million short sale. $1 million, and it still needed 250 to 350,000 in work that you're going to have to come out of pocket for, right? Or you're going to get a loan that's going to be a much higher interest rate so you can get that.
Great point.
Right? So it's like there's a lot of unknowns when you're purchasing a short sale. Sometimes you don't even know the condition of the property. You're in that process for 2 years, you get the house, and then you realize that the condition of the house greatly depleted over those years, and now you have to put even more money up front down. And to be honest with you, there's so much competition out there for foreclosures and short sales now. There's investors out here who are ahead of all of us. They're looking at tax records, they're door knocking, they're hounding these people for their houses, and they're snatching up these short sales and foreclosures. But they also have the cash, right? There's usually a group of investors. They have the money in hand to deal with the process and to deal with any violations, any repairs needed. So I usually get these questions from people, especially first-time home buyers, and it's not to be negative or put it down, but in my opinion, in New York specifically, it's just not worth it for the prices that these short sales are, because they're still very high, right?
If I could add something really fast. So I represent, quite a bit over the years. I represented quite a bit of sellers and purchasers in short sale deals. And whenever we have a deal sheet, right, what as you discussed earlier, sent over, I always ask the buyer's attorney and the buyer's realtor if the buyer understands the conditions of a short sale, right? Because you're not closing timely. Chances are, you're buying the property as is, right? In contracts, a lot of times you have language stating that the property should be delivered vacant and broom clean conditions. Not in short sales. Short sales is really as is is the way it stands. So when you're looking at short sales, you have to understand all of that. And if, like you said, if you are a first-time home buyer, I don't, I generally discourage them from buying a short sale, especially in New York. Something you have to get used to before making those offers.
Yeah. Cool. Well, I see that everybody put their contact info in the chat box. So Brian's in there, everybody's in there. Please include your email if we don't have it already. By Monday, we'll shoot you an email with our buyer packet so that you can get even more information than what we were able to share here. But then also it has the closing costs and a lot of the things we did talk about. If you guys have questions or you want a one-on-one virtual consultation, don't hesitate to reach out. Reach out to these guys as well. Again, even if you're a year to 2 years out, it doesn't hurt to plan ahead. Now you have the time to have those conversations, most likely, unless you're an essential worker, which in that case, thank you so much for what you're doing during this time. But if you have the time now, just do it. So that way you know exactly what you need to work towards to make this happen. One last question, guys, because I know Kawanda, who's a friend of mine from school back in the day, she's on here, and I know she was considering buying land and building a house on it, right? How realistic or likely do you think, or even expense-wise, do you think it's worth it to do a purchase like that in New York? Because I have had other people who've asked about doing that in Queens or Brooklyn or...
She's going to need a lot of cash on hand in order to do so.
And time.
And time?
Oh yeah. I mean, you're dealing with the bureaucracy of New York City, right? So you're not you're not just putting up a house. You are submitting plans. You're working with an architect. You're working with the Department of Buildings, right? Department of Buildings, as we know through our experience with Dallas, that's it's just an unbelievable
A shit show
to work with. It's just an unbelievable agency to work with. So you're talking about time, money, and stress levels through the roof. I mean, I would never take on personally. I would never take on that kind of an expense or that kind of responsibility to build something myself.
Okay, cool. I appreciate you guys for making it on a Saturday. Like I said, we have this recorded. More than happy to share it if you wanted to reflect back to it. If you have any questions, don't hesitate to reach out to any of us. And I hope that you guys have an enjoyable and blessed weekend.
Take care, everybody.
All
Thanks
right.
for that.
Have a good one. Be
Thank
safe,
you.
everybody. Thank you. Thank
Bye.
you. Thank you.